Hi, welcome to the Market Alert for Tuesday, the 2nd of August 2022. Markets turmoil as bad news is not great news anymore. ISM numbers yesterday, I'm selling more. They seem to dominate yesterday's narrative, along with this ghastly woman Pelosi. She's heading off to Taiwan just to irritate the Chinese and set us up for World War III. Pelosi Taiwan trip and plummet in ISM prices paid hits yield and the dollar. And this continues as well. US stocks were subdued amid tensions regarding Pelosi's potential Taiwan visit. She's going there. She's going to stir it. That woman is in her 80s. It's time she just cleared off and left everybody alone. And the other news, barrage of central bankers warn markets. Powell hasn't pivoted, but it's too late. The market speculation about pivot is overdone and counterproductive. Bill Dudley of the Fed said during yesterday, and this is actually well worth a quick look, because the three things that Dudley was on about is jawboning, the smorgasbord of Fed and former current speakers jawbone down the idea that the Fed pivot is imminent. Really ugly global data, and I agree with this one. There's a lot to come yet. I mean, we're only in August, and of course we haven't factored in food shortages and also the increase in energy bills that's coming in October. It's okay at the moment, no heating on, but wait until we get towards October, and lots of more ugly data to come. I agree with that. And also World War III worries, perhaps only of a side notice, but Pelosi's plan to visit Taiwan raises the risk of World War III, and that is just too bad of news to be buying. So who wants to buy when there's the prospect of Pelosi going over there and stirring it? Unbelievable. Economic news for today. Jobs front news. We've got the jobs opening. This is out at 3 p.m, so keep an eye on that one. And then we've got Bullard speaking, but not until after the markets are closed, 11:45 p.m. Gold-silver ratio moving back to the upside, and the reason for that is because of this visit by Pelosi. Gold is holding because of the potential outcome of China getting really peed off with the fact that she's done this and then going in and bombing Taiwan. So you're seeing the gold-silver ratio moving back up to 87 there. Back to the markets. It can only be described as this. Max frustration. Markets stay alive, unchanged today, but so much pain to come. Never mind yesterday's sideways move and whatever, but it's starting to pick up a bit overnight as well. So let's have a look. But certainly a frustrating day yesterday for trading. So if we look at the Dow, you can see the market trading up to the 89% retracement yesterday, down on the overnight as well, already close to yesterday's low. Let's have a look at this in more detail. If we break the low here, then we will continue down in the daily chart. So the daily chart gives you these areas of support along with that 5-bar moving average there. So if we break the low of yesterday, the 5-bar moving average, we're looking at the 38% retracement, and then a continuation to the downside on these numbers. However, the market could find support at the low. I go back to the 30-minute chart. If it finds support at the low, then we can see prices moving back to the upside, and this would be the upside back to the high. Like I say, I don't know what's going to happen. I just trade what is likely to happen, and then I trade once the market opens what it's telling me to do. So trade what you see. In the German DAX, also at 89% retracement, so we've got divergence as well there. So the market trying to put this new high in yesterday, and we've also got supply, so that we're holding the market at the high. Overnight, the market lower, also below yesterday's low already, unlike the Dow, and below the 5-bar moving average. These are the downside targets for the German DAX. In the 30-minute chart, if I can just find it, 30-minute chart, we're already through the low, but we're actually finding support at a double bottom, and it's also the S1. So you may get a bounce off this at 7 a.m. So watch the 50 and 20 moving average in the 30-minute chart. And in something like the 5-minute chart, you'll see there's a clear indication of how many attempts we've had at that low there. you can see that. So the S1 is proved quite strong. We've also got a cluster of volume and it's oversold. So a rally back to these levels wouldn't surprise me one bit, to be honest. And in the S&P, trading up to the 89% retracement, already below yesterday's low as well, and also just at the 5-bar moving average. Again, I've already marked up the fib retracements, the initial ones, on any downside targets. And again, if we look at the 30 minutes, you'll see that we've already tested yesterday's low. Market's now retracing there as well, but it is already had a bit of a rally, so it'll need to retest the low before moving to the upside there. In the FTSE 100, trading up towards the 78%, supply there as well, overbought, and finding support at the moment at the 200 MA and already below yesterday's low and the 5-bar moving average there. These are the downside targets. You've got a 62 at that 200 MA as well, which has been drawn from here. Pull back to here. Let me just remove the other arrow so you can see that a bit more clearly. So that 62 is important, 7370, and then if we break that, we head down to 7326 at the 89, and just below that we've got the 50 EMA there as well. In the 30-minute chart, you can see there as well, S1 for this market already below the low, but finding support in the 30-minute at the 200 MA as well, which is probably why it's trading sideways at the moment. So we need a bounce off this. If the market fails to close and hold above the low, then it's likely to continue low. If it does, then we could see a bit of a move to the upside as well. As all this bad news starts to come into the market, you'll be amazed how many times they'll turn it around and move it the opposite way to what logic would dictate, but that's just to wrong foot traders. Like I say, trade what you see, not what you think it's going to do. And in the Japanese yen, this tanking overnight as well, down to 78% retracement, and got support there to the left at the moment. Take this out, we go down to 89, and also the 200 MA, which actually ties in with this sort of area here as well. In the 30-minute for yesterday, the market sideways. Everything was sideways yesterday, but overnight the yen has been selling heavy down to the S2 and finding support in this area, because if we go back to the daily chart, it ties in with this area here. In the pound, you can see also the market trading up to 89%. The crossover in stochastics overbought, due for the market to come back. However, there's one caveat with this one. We're looking at the interest rate increasing from 1.25 to 1.75 on Thursday by Bailey, so that's going to lend a bit of support to the upside if it's only initial support before moving down. And of course, with the situation with Pelosi, that should strengthen the dollar. That's going to put a major put some resistance against the pound, of course, and also the metals. So the pound up strongly yesterday to that 89 in the 30 minutes, but trading sideways at the moment, but finding support at the DP and the 50 EMA with demand, and it's oversold, so room for a bit of a move to the upside there in the pound. Finally, you can see silver trading up yesterday to the 50 EMA. We've got supply coming into the market. We're overbought and it's down on the overnight, and that's why I've drawn these lines in here, because that's where it's going to be going. This move, just a short squeeze, dead cat bounce, call it what you like. This is likely to be hammered back down to those $18, $19 levels that we've seen over the last few weeks. And 30-minute chart yesterday moving up quite strongly, and then as we got to the 1 p.m. fix, we can see what they do, 2 o'clock, and then overnight the market's made its way down. Watch the low. If that's taken out, then we continue down in the daily chart to these levels, but first we have the 5-bar moving average in the weighted as a bit of support. Gold also trading up towards that 50 EMA, down a bit and now on the overnight, but still stronger than silver, because silver's taken out the previous day's low, whereas gold hasn't. So you can see why the gold-silver ratio is moving back to the upside. 30-minute chart of gold moved up on the news of Pelosi, but now has moved to the downside. Watch the 50 EMA and also this psychological level, which is going to be 1770 on this line here, because the 50 EMA is also there as well. Dollar on the overnight, bit of demand for yesterday. Overnight sitting at the 50 EMA, likely to bounce off this level. So keep an eye on the dollar as well. Now finally, crude oil down sharply yesterday. See some selling around there. We've rolled over to the October contract now. V is October in the old futures contracts. That's how they were denoted by different letters of the alphabet. And V is October, which actually expires in September. They always expire a month before their designated month. So October expires in September, etc., etc. Bizarre, I know, but it's the way it's worked ever since it was set up. So the crude oil market just below $100 per barrel there, but it's got a lot of support at the 200 MA. Plus also when you get a rollover in contract, you get what's called a change in the basis as well. So unless you're actually following the cash crude market, you'll always see these small differences, which account for storage and insurance costs, which is why you see the differences. Okay, that's it for this one. Keep an eye on Pelosi's visit to Taiwan, and if she does land there, then I hope they deport her to China for the trouble she's going to cause. But other than that, as ever, thanks for watching. See you in the next one.